Hey guys, we're going to look at ETFs now. What ETFs are suitable for scalping? So ETFs pretty similar to US stocks, right? They are ultimately the same thing. They trade in exactly the same way. They are effectively a stock. But the good thing about the ETFs is because they often represent a basket of stocks or a sector or a basket of commodities or something, it means that they are often very, very volatile. And we'll look at one in a minute that I've been trading pretty recently. It's super perfect for scalping. So we've got index trackers like our SPY, like our diamonds, that kind of stuff, which track the S&P 500. The Qs was the other one I was thinking of, which tracks the NASDAQ. Now these generally aren't that good to scalp. If you're trading CFD or spread bet, going and trading the cash or your broker's cash version of the index is generally the better way to trade it. 9 times out of 10, if not 99 times out of 100, guys. Trading the ETF is a less efficient way of trading it if you're trading via CFD or spread bet. If you're trading directly on the exchange, let's say you're trading Dow, you may well find that trading diamonds over trading S&P 500, you may well find that trading SPY is better, especially if you're taking market orders. Let's say you're doing that because the spread is different, the way it trades is different, and so if you really are kind of keen on trading the indices, you're keen on getting in tune with them and look at the ebbs and flows, then just look and see, okay, should I be trading the ETF? Should I be trading the future? And obviously there's tax issues as well with the US, the way that they treat futures different to stocks, so that might be a consideration for you. If you're in the UK, spread betting the indices is the better option. Not always available for the ETFs. If we look at something like VIX ETF, VXX, super volatile ETF. One thing I want to point out is by the time you're watching this, the VXX will have expired and it's now VXXB. So they've kind of expired it, adjusted it, moved it on. So just bear that in mind. The point is, there are a multitude of volatility ETFs out there. Now, a volatility ETF, ironically, is volatile because these things are acting based on like a fear index, if you like. This kind of won't go into too much detail about the VIX. I've probably done a video about that. Go and check it out if you're interested. But the point is, guys, when there's a significant movement in the US markets, the VIX will be spiking dramatically. And when it's spiking, one vehicle you can use and definitely can scalp is a VIX ETF. So you've got the VXXB, you've also got UVXY, which is kind of a triple leverage version of that, and that moves, guys, like 4%, 5%, 15% in a day. And if you go directly to the exchange, you're going to be fine because the spread on the exchange is going to be hardly anything. It's reasonably volatile, but compared to how much it moves, it's going to be relatively cheap. A lot of spread betting providers and CFD providers won't allow you to trade it, so it's something to be aware of. But I wanted to include the VIX volatility ETFs because they are super good for scalping under the right conditions. Some people actually do scalp it from the short side when markets are in an uptrend, and it makes sense because generally the VIX kind of goes down slowly and grinds lower. So if you're kind of short positioned on any intraday spikes on a VIX ETF, then you've got the wind behind you in terms of the volatility component just crushing. So that's one thing to look at. But we'll look at things like that in a strategy later on. Other things are gold miners like GDX. We've also got NUGT. Before we go into NUGT, we've also got GLD, which is a gold ETF. I think that if you're going to scalp, you're better off going directly and trading the gold contract as opposed to the ETF. Someone may disagree with me on that. NUGT, again, is a triple leveraged ETF. It's a bull gold miners index, moves significantly. One of the things you can scalp, this is the beauty of kind of some of the ETFs now, guys, is that because there's some triple leverage and double leverage, they move significantly more. And yes, very often that means the spread is wider, so you kind of lose what you gain. But the cleaner moves with some of these more aggressive things. I know guys who literally will sit there and will trade like NUGT, and that's all they'll specialize in. When it's moving, they'll just trade that because it has the facility to do that. Now, one thing you've got to be careful of with these ETFs, guys, is that they are obviously a lot of the time pegged to a specific basket of stocks or a specific commodity or specific different months of expiry. So there will be other algos involved. We talked about in a previous video about who your counterparties are, and so they will be adjusting the ETF. So you've got to be aware of that. But from a scalping perspective, these offer ample opportunity. If there's not anything US stocks and you kind of want to get involved in these offer multiple opportunities when conditions are right. And for me personally, I like to go to these if the specific sector is moving. That's what's the beauty of these guys. If there's something kicking off in gold, yes, you can go to the futures, but you could also go to GDX, the gold miners. You could go to NUGT. You've got opportunities there, and you can become a specialist in how that trades. Find the right vehicle for you, whether it is a spread bet, whether it is direct to the market, and trade news flow that means that markets will trade supply and demand and all trade very, very similar to each other. You've also got sector specifics like XLE, XLF, IBB, etc. The financials, healthcares, all the other kind of stuff you've got out there, biotechs, and they can be very, very lucrative in times right. Generally speaking, my opinion is those XLs are a little bit quiet most of the time. However, let's look back at the financial crisis. XLF, for example, and some of the other ones like FAS and FAZ, they were really, really active. So it's all about, often with scalping, is finding your, before we move on to that, let's look at emerging markets like EEM's another good one, and EWZ, which is the Brazilian ETF, which often gets really, really carried away. But what I wanted to say before we got to the end of that was the idea with this, guys, is that you have a core markets that you trade from a scalper. Let's say you want to trade every day. You have your core markets, maybe that's the DAX, maybe that's the Euro US dollar, or maybe whatever it is. You trade those, but then most scalpers will go to where the liquidity and the volatility is. So if there's US stocks that are going crazy and there's general movement in those, they'll start trading them. Maybe it's the financials, maybe it's the UK miners. So they're very easily able to adapt to where the money flow is, because as scalpers, we just want to try and catch that order flow move, that little spike, that little fade. And very often it's similar. There are different kind of nuances depending on what we're trading. But if we're trading from a volatility perspective, when stuff gets volatile, it acts very similar. And so having that core amount, or let's say you're not scalping every day. Let's say you're saying, all right, I'm not scalping every day, but I'm going to go when there's action. Maybe I've got enough time to trade aggressively every day if there's volatility. I know plenty of guys who actually do that and don't trade all day every day, and I'm pretty much one of them actually. I don't trade all day every day, but I will have some positions on that I've got on from a swing perspective, from a scalping entry, but also when there's stuff kicking off like that VIX, like other stuff, I'll be there and trading it aggressively from an intraday perspective. Maybe not so much from a scalper's really, really short term, but a day trading perspective, and that offers you opportunity.